Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on KLA Corporation, a leading provider of process control and yield management solutions for the semiconductor and electronics industries. KLA plays a critical role in the manufacturing of advanced semiconductors. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
KLA Corporation has been a key player in the semiconductor industry, particularly in process control. From a behavioral finance perspective, how do biases like overconfidence and the status quo bias influence their decision-making, especially in areas like technology development and market strategy?
Overconfidence is particularly relevant to KLA approach, especially in their focus on process control technologies. KLA leadership in this niche area of the semiconductor industry can lead to a strong belief in their continued ability to innovate and stay ahead of the competition. This overconfidence might drive significant investments in new technologies and process improvements, underpinned by the belief that their expertise will ensure success. While this confidence has allowed KLA to maintain its market leadership, it also exposes the company to risks if they overestimate the demand for new technologies or underestimate emerging competitors. Status quo bias also plays a role, particularly in how KLA approaches its relationships with established semiconductor manufacturers. The company's long-standing partnerships with industry giants create a tendency to focus on maintaining these relationships and the technologies that have historically been successful. This bias can lead to a preference for incremental improvements over more radical innovations, which might be necessary to respond to disruptive changes in the semiconductor industry. While this approach helps KLA maintain stability and reliability, it also requires careful balancing to ensure they remain responsive to broader industry shifts.
And this focus on leveraging their existing strengths while confidently pursuing innovation has helped KLA maintain its leadership position in the semiconductor industry, appealing to both customers and investors who value technological expertise and stability.
Exactly. KLA's strategic use of overconfidence in driving technology development and status quo bias in maintaining strong industry relationships appeals to investors looking for a company that combines innovation with reliability. However, this approach also means that KLA must carefully manage the risks associated with technological disruptions and competitive pressures, particularly as the semiconductor landscape continues to evolve with new advancements and market entrants.
Let's talk about diversity, equity, and inclusion at KLA. As a global leader in semiconductor process control, DEI is particularly important for KLA. How does this intersect with behavioral finance?
KLA's approach to DEI is crucial, especially as the company operates in a global and highly technical industry where diverse perspectives can drive better decision-making and innovation. From a behavioral finance perspective, strong DEI initiatives can enhance KLA's ability to innovate by fostering a culture that values diversity and inclusion. A commitment to DEI allows KLA to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in semiconductor technology. For investors, KLA's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help KLA build stronger relationships with customers, employees, and communities, reinforcing its brand as one that values inclusivity and technological advancement.
Investors are increasingly considering DEI when evaluating companies, especially in technology, where the ability to innovate and serve diverse markets is critical to long-term success.
That's right. By embedding DEI into their corporate culture and innovation processes, KLA not only improves its ability to serve a broad range of stakeholders but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to global markets, KLA operates in numerous countries, providing semiconductor process control solutions to manufacturers worldwide. How does the company adapt to different markets, and what role does behavioral finance play in this?
KLA Global strategy involves tailoring its process control technologies to meet the specific needs and regulatory requirements of different regions while maintaining its core focus on precision and innovation. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with operating in diverse markets. KLA's ability to navigate complex international regulations, such as those related to semiconductor manufacturing standards, environmental regulations, and data privacy, allows it to maintain a strong global presence. The company's approach to understanding local market dynamics and adapting its strategies accordingly helps mitigate risks associated with regulatory changes, economic fluctuations, and cultural differences. By ensuring that its solutions are relevant and compliant in different regions, KLA can continue to expand its market share and strengthen its global brand.
And this adaptability is essential for KLA, especially as they face competition from both local semiconductor process control companies and other global giants. Their ability to maintain their brand's relevance and leadership in different markets is key to their continued success.
Exactly. KLA focus on understanding local market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the semiconductor industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in global technology standards, regulatory environments, and competitive pressures.
Now, let's compare KLA to other companies in the semiconductor and technology sectors like Applied Materials, Lam Research, and ASML. How do the behavioral finance dynamics differ?
KLA dynamics are often compared to other semiconductor equipment giants like Applied Materials, Lam Research, and ASML, particularly in their approach to technology leadership, market expansion, and competition. KLA's strength lies in its focus on process control and yield management solutions, appealing to investors looking for a company that prioritizes precision and reliability in semiconductor manufacturing. Applied Materials, with its broader portfolio across semiconductor equipment and materials engineering, appeals to investors interested in a company that balances diversification with technological innovation. Lam Research, known for its leadership in wafer fabrication equipment, attracts those looking for a company that is driving advancements in chip manufacturing processes. ASML, with its focus on photolithography systems, appeals to investors interested in companies that are at the forefront of next-generation semiconductor manufacturing. KLA behavioral finance dynamics are shaped by its reputation for technological expertise, strong global presence, and adaptability, making it an attractive option for those seeking stability and growth in the semiconductor.
And unlike Applied Materials, which has a broader focus across multiple areas of semiconductor manufacturing, KLA's strength lies in its specialization in process control, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For KLA, the focus on high-precision technologies, market leadership, and global reach provides a unique value proposition in the semiconductor industry.
To sum up, KLA approach to business is deeply influenced by behavioral finance principles, whether it's through their technology investments, global market adaptations, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives KLA's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.